advise based on current market condition,
Yep.
right? We've actually we're still in quite a pandemic situation,
Yep.
and the recent Russia and Ukraine tension. So, what would be your suggested strategy use, and especially in the investment portfolio you did for your clients?
Okay. So actually, there was a shift in the strategy back in during Christmas last year, because there was already concerns about the federal government raising interest rates,
Right. Okay.
and inflation was already very high, like 7 to 10% already. And understanding that New Year's Eve and New Year's Day has a certain impact on investor sentiments, I shifted all my clients' money from volatile funds to a cash fund, which I used to park. The cash fund is where, when the money is sitting in the cash fund, even when the market is going through volatility and plunges, the cash fund doesn't plunge with the rest of the market.
I see. Alright.
So that's where I placed it defensively. Then ever since then, what has happened are the growing concerns of the interest rate hikes, federal government announcing that they are going to stick to schedule, and also the rate that they are going to increase interest rates at. And then the Russian-Ukraine war started, which, what happens in wars? Wars cause energy and oil to go up in prices. When energy and oil go up in prices, who else will suffer? Or who else will experience the more expensive cost of energy? Factories.
Okay.
The cost of production goes up.
Right.
Cost of production go up, what else will also continue to go up? I mean, supply chain is impacted, right? Inflation goes up. Some more.
Okay.
So inflation was already going up. Now inflation is going to go up faster. What's the next concern that investors will have about? Would be interest rate increasing of interest rates.
Right. Okay.
So now what's uncertain is federal government, how much quicker they are going to increase interest rates, and how much more they will increase interest rates at. Of course, recently federal government just announced they will stick to schedule. So last time is when. Now is now. What's the next conversation? Maybe soon. Who knows? And investors don't like uncertainty.
Yeah,
like
correct.
this. So right now, in my strategy, I'm holding on to 70 to 80% cash.
Wow. Okay. 70-80% cash. Right.
And
okay.
let the market plunge, and I nibble on it a little at a time, 2%, 3% for each dip. And it has been lower lows. I mean, for those of us who follow indicators and in the indices, right, we will see lower lows for the next over the past few months and also moving forward.
Oh, okay. We're supposed to be sad about this?
Oh, be excited.
Oh, really?
Be very excited because, I mean, how many of us were very concerned that in 2021 and 2022 who wanted to get started on investing, right? We were worried that, are we buying it too expensive?
Okay, that's correct also.
Huh?
Yes. Okay.
Is everything overbought?
That's true,
Everything
that's true.
overpriced? Now is the time to start.
we should actually buy
It's
lower.
a discount right now.
Correct, discount.
The Great Singapore Sale is here.
Correct. So as it keep on dipping down, right?
Yeah.
So we can keep accumulating.
Nibble, bit by bit.
The dollar cost averaging.
Yes, it's shopping time.
Shopping time, cool.
Past 2 years we hear
Provided-
shopping time. Now it's
Right.
shopping time.
I see, no wonder. Okay, so excited. Okay, sorry. So shouldn't be sad. It should be excited. Yeah.
Yes.
No, sad is because what are we supposed to buy?
Wow. That's actually
that's the key, you know. I mean, everything is in discount. Actually,
Only energy is not in
consumers-
discount.
Yeah, consumers are facing inflation.
yeah. So to be honest, at this point in time, cash is really king.
That is correct. Okay,
Find every single way you can to raise cash. Not to rush into investing right now, but raise cash first.
Raise cash.
Yes. The next thing that I'm looking forward to is when the war ends. And there will be the way the war ends also has to be pretty specific. That means
Right.
one side must win.
Okay.
Yeah,
Okay.
there's
okay.
no like come and talk to each other.
Cannot. Oh.
Not that kind of end.
That's
Yeah.
peace talk then.
Yes, but
Okay.
it's,
Then I think you're trying to say that there must be extreme prices. Is that what we're heading?
as in a clear cut end must happen because
okay.
there are other factors that is influencing the market, right? Which is interest rate hikes and uncertainty of how soon and how much more interest rates will be increased at. Therefore, investors need a very high level of certainty. So a clear winner in the Russian-Ukraine war will definitely create that sentiment. Yeah. So
Okay.
cash, raise more cash now.
Right. So cash is king, huh?
Yeah.
Okay. Can let's come and look deeper into how we can, look forward to certain funds that we can probably explore when time is right.
Yeah.
I suppose now you're calling for accumulate cash first,
Yes.
right?
Raise the
rather
cash.
than plunge into any.
Yes. No need to rush.
No need to rush. Okay. Although you say shopping time, but
Shopping
no need
time.
to rush yet.
Shopping time can also mean window shopping for now.
Okay, that's interesting.
So take the time to understand the different sectors, the different economies also where, like for example, if one of the indicators I use is the triple Q, which observes the US economy, the US large cap companies. Then I'm also looking at C triple Q, right? And I'm looking at some European ETFs as well as an index of, for window shopping.
Right, okay. Monitor the market for the right opportunity to
Yes.
enter, right?
Don't ignore Asia, excluding Japan also.
Correct.
Very
correct.
interesting market.
Asia is the next booming.
Yes, possibly.
Okay, Ken.
or booming or safe haven compared to the
Haven.
rest of the world.
Right. So this is a tip.
Mm.
I think Ben actually shared, right? So
A
we'll
tip to
come back
myself
again
also.
later. Yeah, let's come back again and share a little bit more towards the Asian market, right?
Can.